Hello everyone and welcome back to Boni's Life. This is a quick summary. Today we're diving deep into the crypto market and let me tell you, things are getting interesting. The big question on everyone's mind is, are we at the bottom? Or is this just a pause before another leg down? We're going to unpack that today with some serious on-chain data. First, let's talk about fear. The crypto fear and greed index is currently flashing extreme fear with a reading of 11. That's the lowest it's been since the dark days of the 2022 bear market. Now, your first instinct might be to run for the hills, but as the legendary investor Warren Buffett said, it's wise to be fearful when others are greedy and greedy when others are fearful. The last time we saw this level of fear was around the FTX collapse, which in hindsight was a generational buying opportunity. So, who's selling and who's buying? This is where it gets fascinating. The data shows a clear split. Retail investors, the so-called weak hands, are capitulating. We've seen massive outflows from crypto ETFs to the tune of $4 billion. But while retail is running scared, the smart money is making moves. Institutional investors, including the likes of Harvard's endowment and the Abu Dhabi Sovereign Wealth Fund, are quietly accumulating. And it's not just them. The big money whales are also on a buying spree. Let's look at the on-chain data, which gives us a transparent view of what's happening behind the scenes. The most important group to watch is the long-term holders, the diamond hands who've held their Bitcoin for over 5 years. Are they selling? Not a chance. In fact, the number of coins held by these long-term investors has actually increased by over 278,000 BTC in the last 2 years. They have conviction, and the selling pressure is coming from the mid-term holders, those who bought in 3 to 5 years ago. These are the cyclical traders who are taking profits. This is a healthy market dynamic. The weak hands are being shaken out and the strong hands are accumulating their positions. This is a classic sign of a market bottom. Another powerful indicator is the MVRV ratio, which compares Bitcoin's market value to its realized value. Think of it as a measure of whether the market is over or undervalued. Right now, the MVRV ratio is in a range that has historically marked the bottom of bear markets, right before the 2019 and 2020 bull runs. It's screaming undervalued. And what about the speculative frenzy? It's gone. The futures market has been completely washed out. Open interest is down, and funding rates have collapsed. This means the excessive leverage and speculation that often fuel market tops have been flushed out of the system. This is another sign that we're at or near a bottom. So, what's the verdict? Is this a true bottom, like the FTX collapse in November 2022, or a false bottom, like the one we saw in June 2022, which was followed by another 22% drop? The on-chain evidence strongly suggests we're in a true bottom scenario. The capitulation of weak hands, the accumulation by strong hands and whales, the historical valuation metrics, and the reset in the derivatives market all point to the same conclusion. Now, this doesn't mean we're going to see a V-shaped recovery tomorrow. The market could trade sideways for a while as it builds a new base. But the data provides a high conviction signal that we are in a prime accumulation zone for long-term investors. The best entry points are often the most uncomfortable ones. And right now, the market is very uncomfortable. So, what's the strategy? Dollar cost averaging is your friend. Layer your buys across the identified entry zones. Don't go all in at once, but don't be afraid to start building a position. The on-chain data is giving us a rare glimpse into the inner workings of the market, and it's telling us that the smart money is betting on a recovery. As always, do your own research, but the signs are there for those who are willing to see them. Thanks for tuning in to Boni's Life. Until next time, stay savvy.